Welcome to Markets Now. I'm Michelle Rook with Kent Beadle with Paradigm Futures, and we're seeing a lot of red on the board here, Ken. And let's talk about corn first of all. Some new lows for the move here again. The wheat market certainly isn't helping corn, but what else is pressuring that market here today?
Well, I think it's partially technical. We had a very bad close on Friday. That last couple of hours, we dropped about a nickel in what was a very thin holiday trade. And, after what was a pretty good start to the week, it was a poor weekly close, and it set us up for, some early weakness here to start the week out. As far as anything fundamental that we're looking at today, we watching social media a little bit and hearing a little bit about the concerns that we have at the at the Panama Canal. That's been an issue here now for a while.
Right.
But there was a comment from someone who supposedly has some inside knowledge that vessels are going to have a hard time getting through the canal at all over the next 3 months. Obviously, our corn sales being up 250 million bushels over a year ago, we've got corn booked off the Gulf, and I'm not sure where the additional freight is going to fall, but it certainly is a concern to the trade. And I think you have a dichotomy going on in corn right now. You've got the areas where yields were better, probably proximate to the delivery market. So, you've been watching the spreads widen out in corn. That's normally a bit of a bearish signal. Of course, the average U.S. basis in corn has actually been getting better. And
True.
Of course, we've got a lot of areas in the country that had yields that were not up to trend. And so you've got a sort of a dual market, but with water levels on the Mississippi low and problems getting through the canal, the delivery market is pressuring the spreads, which is pressuring futures sentiment. And yet in the country, the industry is having a hard time buying corn, as witnessed by the ever increasing basis levels that we see in some parts of the country.
Yeah, that is an interesting dichotomy for sure. So I'm going to deal with wheat, since corn and wheat seem to be trading together here again today, but some new lows in the wheat market. Is that all technical selling pressure as well?
Yeah, I mean, it certainly feels that way. Of course, we've been kind of priced out of the market here for quite some time. We've connected on a few sales into China as they've gotten a little bit worried about the situation out of Ukraine. But every week we get another report of some sort of military action by the Russians in Ukraine, or some sort of counter attack going on by the Ukrainians, and it just doesn't seem to be having any impact on the market flow of wheat out of that part of the world. And so as a result, we just kind of continue to see pressure. We did not have a commitments to traders report on Friday, but I would tell you that the combined position of shorts in Chicago, KC, and Minneapolis is nearing a record. And so, I do think a lot of this is speculative. And of course, as we're getting close to first notice day, there are probably basis contracts out there. And because we're making new lows in both corn and wheat, farmers haven't been very eager to price those basis contracts out. And so there's probably some forced liquidation going on here ahead of first notice day, which is Thursday.
Yeah, November 30th. So soybeans probably getting a little bit of spillover pressure from the lower corn and wheat market, yet you have products up. So is that market also taking out a little Brazilian weather premium or not? Because actually planting is still behind in areas of Brazil, isn't it?
Yeah, they're 12% behind, and Rio Grande do Sul is still, I think, about 26% planted, only gained 3 percentage points this past week. They've got a long ways to go down there. We were looking at some NGVI numbers, the greenness index, and seeing that the condition of the crop year over year, definitely worse. There are a lot of private estimates that are down anywhere from 5 to 8 million tons, but of course it's early, and we make yield in soybeans after the soybeans have flowered and pod set, and whether or not we have adequate rain and moisture in the ground at that point in time. And the marketplace is just not willing to put a lot of premium in at this time, as long as there's some rain in the forecast. And let's face it, there is rain in the forecast. The question is, will it be enough, and will it continue?
No doubt. So that is a story that is yet to be told. Cattle market today also tried to consolidate early after what was a super ugly day on Friday. So now we're lower except for the December live cattle contracts. So, are the specs still liquidating their long positions there, and how much more pressure do you expect in the market? Because I think now we're past the point where we've taken out these mid-May lows where we had the first chart breakout.
Yeah, I think, we've got two issues in cattle. First of all, we are still liquidating out the speculative position. We did not have a commitments to traders report on Friday, but going into this next report that we're going to get tonight, their position was still long, in the neighborhood of 25 to 35,000 contracts, which is still sizable for the cattle contract. Cattle are not the most liquid contracts that we have in agriculture. So we do think there's liquidation that is still going on there. And the other thing is in the cash. I mean, let's be fair. We've had two consecutive cattle on feed reports that have shown marketings well below expectations. And of course, we had that large placement number, not last week, but in the month prior. And so what that tells us is that, we have a fair number of cattle that are probably ready to be marketed, but haven't been marketed because of the fall in price. And, that's a lot of cattle that are going to have to hit the marketplace here sometime soon. Once we clear that supply, we still think that, total inventories are probably smaller next year, and we should have a good first quarter rally. But right now, we need to get past all the market ready cattle that are in front of us.
Yeah, we need to find a bottom here, that's for sure. And it's hard to know if the lower futures have been causing the lower cash, or the lower cash causing the lower futures. It's just kind of that circle. Hog market, lower cash and cutout values, lower seasonals, all kind of weighing against that market or on that market.
Yeah, I think so. Obviously, the decline in hogs was not nearly as significant in cattle, and there has been a kind of a value trade going on here. And while we're trying to find our seasonal lows in hogs, we do still see some value in pork relative to beef right now, and I think that gives us a little bit of support relative to the cattle. Ultimately, though, those cash values are still moving lower, as they normally do at this time of year. We don't have the same situation with a big spec long in the hogs, and in fact, they've kind of gotten themselves turned again a little to the short side, I think. So
right.
we may ultimately find some support here, and of course, we get past December, the seasonality changes, and things do tend to start to work higher, and we do expect that in hogs here eventually.
All right, let's hope so. Thanks so much for joining us, Kent Beadle with Paradigm Futures. That is Markets Now.